Hello and welcome to this Monday's weekly morning market briefing. We've got lots to talk about, but firstly, commodity traders bet on big data and AI, as well as that Trump spends more than a quarter of campaign donations on legal fees. And finally, Ukraine faces race against time to deploy US funding. We've got lots to talk about in the charts also, lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, though, make sure you subscribe. The first article to talk about is to do with these commodity traders. Now, commodity traders of the world are now investing big into data processing and analysis. This comes amid a race to develop a technological edge over rivals. Now, of course, this is this article is kind of covering these two topics that we've been covering greatly or talking about a lot of the time, which is, of course, AI and the commodity markets. We've, of course, been talking about AI in regards to ChatGPT 4 and the future AI models which are currently in progress and soon to be released, according to those tech giants and such as Microsoft and Meta. So that's kind of been the situation with AI, and we know, of course, that many are now kind of making predictions in the way the world is going to change based on this AI revolution, which we're so-called experiencing, with, of course, that recent article that we spoke about with regards to fossil fuel giants. These CEOs of these large fossil fuel companies have basically been forecasting that this AI revolution is going to require so much power, so much energy to power the machinery, to power the kind of data centers, that in fact ultimately this is going to create a surge in demand for those key fossil fuels, and therefore kind of weigh on this renewable energy revolution at the same time. So basically saying you can't do both at the same time, it does seem, but of course we'll have to wait and see to find out more about that. With regards to commodities, though, of course, we've been noting the recent spikes in commodity prices as a result of geopolitical issues within the Middle East. Of course, increasing tensions has led to the prices of oil and gold, rising in gold sense, to all-time highs, and in gold sense, and in oil sense, pardon me, oil's become highly volatile and has shot up to the upside, obviously, but ultimately, oil still hasn't really continued that push to the upside, and more recently, due to a lack of kind of Iranian retaliation to Israeli strikes, we have actually seen oil's price dip. So certainly, commodities are in a very interesting position at the moment as a result of those geopolitical issues, and that's adding on to already the issues that were already at hand with supply and demand for such commodities. So all of this is creating a very interesting situation, and what we're hearing here from this article is basically these key trading firms, these key hedge funds, are now looking to AI and big data to better understand the commodity markets, and why this is kind of important or an actual topic of discussion, whereas we might not note that another industry is focusing on integrating AI, is ultimately because this industry, these firms that were heavily invested within the commodity markets, have really kind of shied away from the use of these high-tech tools, and have really focused more so on the older traditional methods of discovery and research involving political connections and logistical skill and that kind of thing. But here we're seeing them now move more so in line with what other firms are doing, which is harnessing the key power which AI is obviously offering, and with the upcoming release of the latest AI models from Meta and Microsoft, ChatGPT and Llama, ultimately we're going to see this kind of become more and more integrated into these systems. So that is why this is kind of very important to note, of course, with the groups of Vital and Trafigura I probably mispronounced that, pardon me, now increasingly focusing on how to apply artificial intelligence in the most physical of industries. These are the companies which in the past had relied on political connections, handshakes, and logistical skill to move natural resources from remote locations to buyers. The company Vital, in particular, employs around 1,800 people and generated about $13 billion in 2023, with this placing Vital as one of the most profitable companies in the world. The attempt to harness new AI technology is a reaction to the growing competition from hedge funds and other trading firms who, whilst move less physical commodities, ultimately have built a lucrative business trading commodities, with the most AI-driven market approach within the industry being found at Citadel, of course, who since 2017 have led a large push into the energy and raw materials trading market. Citadel have made leaps and bounds trading commodities by hiring a strong team of weather forecasts, with their commodity trading team growing to the size of 300 people, with the gas and oil products making up the majority of the commodity trading profits recently. So that's also something that's important to note, because of course we have seen that volatility within the gas and oil markets, and therefore it kind of starts to make sense why we would be seeing the greatest profits be from that kind of sector at the moment. So certainly a very interesting article and topic to note, and I think one that will be important to understand as the years move on with regards to of course the commodity trading market and that kind of thing. So keep your eyes on gold and oil, most certainly. Both are in a very interesting position at the moment. I just thought this article would be interesting to contextualize what's going on over there. Next article to talk about, though, is on a very different note, talking about Trump with regards to his campaign donations and legal fees. As we have spoken about Trump many times on this channel with regards to his legal challenges, and with the 2024 presidential election coming up, obviously that's also a very important topic which will be affecting markets, which we've been covering in the lead up, basically. It has now been revealed that Donald Trump's donors have paid more than $76 million on legal fees for the ex-president. This comes as the most recent sign that his court battles are draining his cash for election. Now, of course, we've spoken actually about this kind of topic before with regards to his legal fees, but more so to do with his campaign donations. I think only a week or two ago we spoke about the difference between what Biden's been able to raise for his war chest for this presidential election versus Trump, and as we've seen, Biden has massively out-earned Trump with regards to those campaign donations. Now, we have heard from certain campaign officials on the Trump side, this is to change in the future, and this is only the result of inflation affecting the working class voters of Trump. But ultimately, the signs are there that it does seem like Trump will not earn or at least not raise as much money as Biden has been doing, basically. And that is not only evident in their basic donations, but also with their super PACs, which of course have a large divergence in the amount that has been basically raised. And so ultimately, as Trump is spending more on legal fees, of course, less is to be there, not only for just basic campaign work, but also there's less there to cover the basic stuff. So if you're not getting as much through your campaign donations and you're spending more of it on legal fees than your opposition, you're putting yourself at a real disadvantage to basically go at this election and win it. So that's the current issue which is certainly facing Trump, with the figure spent on legal fees making up around 26% of the total that he has raised. This also looks to hurt Trump further, with Joe Biden's super PACs having raised more than Trump's pro-Trump groups, with Biden's super PACs raising $413 million versus pro-Trump groups, which have only raised $326 million. The legal challenges facing Trump are growing larger and larger with regards to the risk for Donald Trump's election chances. That said, Trump is still leading Biden in 5 key swing states of Arizona, Georgia, Michigan, Nevada, and North Carolina, with Pennsylvania and Wisconsin being tied. However, ultimately, 50% of the polled Americans said that they would consider Trump unfit for office should he be found guilty of a crime. Trump currently faces 4 criminal cases and a civil fraud case threatening his business empire. Trump backers, however, say that the next campaign funding round will show a different picture, but we'll have to wait and see if that's actually the case. But it's looking bleak for Trump on the the legal side and the campaign finance side, but really on the election side, Trump is leading still. So it may be that the odds are against him, but it does seem like he's performing well despite that. Last article to talk about, though, is to do with Ukraine. With regards to, of course, world tensions. So we're kind of talking more about geopolitics here, as of course that's been affecting markets greatly, as I spoke about at the start, with both the oil and gold market being heavily affected by the Russian invasion into Ukraine, and we're also seeing that now play out with the conflicts within the Middle East and the potential regional war which could break out there. Now, Ukraine faces some very tough weeks ahead of the the Russo-Ukrainian war continues. Ukraine for the past few months has been starved of needed US lethal aid, which has been held up in the US legislative process as a result of Ukraine's skeptics in Congress. This has just changed, however, as the US House of Representatives have now passed a $60 billion military aid package for Ukraine over the weekend, which now looks to support Ukraine against a continuing Russian advance and a suspected Russian offensive. Officials have said that some of the arms and ammunition were sitting in Poland already and other nearby nations, and so will be quickly transported into Ukraine now. That said, Ukrainian officials and military analysts have painted a bleak outlook on the military situation in Ukraine after noting that this delivery of the US aid is likely too little too late. During the period of no US aid, Russia was able to strengthen their hold on Ukrainian territory and was able to seize the initiative on the battlefield. Troops on the front line, according to the FT's sources, have said that without the needed aid, they have been barely able to hold on due to the endless Russian attack. So certainly a bleak picture for Ukraine at the moment, and it does seem like this aid was very much needed. But as of course ever since really October of last year, no US aid has been able to really go through in the very normal manner that Congress passing aid, and as a result it does seem like Ukraine has been hurting as a result of that. So most certainly this is a very interesting topic and one that will be affecting world tensions and the gold and oil markets then as a result. That's all to talk about on the articles, though. Next to talk about, of course, is the charts, where we do have quite a bit happening, as you can see here with the US 30, which of course has been in a very bearish trend recently, obviously following Jerome Powell's change in rhetoric alongside the rest of the Fed's officials, which have really started to project a very kind of hawkish outlook on the US's monetary policy, with of course recent economic data from the US showing that the US economy is still strong, and ultimately inflation is remaining persistent within the US economy. And it does seem like the Fed, alongside Jerome Powell, of course, or led by Jerome Powell, of course, is really looking to crack down on that. and therefore they won't be able to cut interest rates as soon as previously expected. As we've said many times, ultimately traders were expecting very early rate cuts entering the year of 2024. Ultimately, we haven't seen that. We're now through the month of March, ending off the month of April. And soon, we'll be starting off summer without any rate cuts yet taking place, which would surprise most traders going back to the start of this year, who expected 6 to 7 rate cuts from the Fed actually. So ultimately, this is a very interesting position and a very tough situation, which is also facing the Fed at this moment, who is having to deal, of course, with this high and very persistent inflation issue. And seemingly, interest rates staying at this kind of higher level is still not doing much, but ultimately they're going to have to hold on to that interest rate for quite some time until those inflation figures do start to decline once again, like we saw coming to the end of last year. So, this is a tough situation for the Fed, and this has caused a great sell-off in US equities, as we saw price on Friday or Thursday basically make its way back down to levels not seen since mid-January. So and these were levels that were first breached back in December. So, really significant levels which are now being reclaimed during this retracement that we're seeing now across US equities. But obviously, we were expecting this kind of retracement due to how overbought US equities were over the past year or so, and so this was to be expected, but still it's certainly hurting many investors and traders within the market who were expecting those early rate cuts. As for on the short term perspective, what markets are doing, ultimately, if we try and draw out some Fibonacci retracement levels, we could be sitting around that 50% Fibonacci retracement level, but ultimately it's hard to judge where price has actually kind of spiked down from, as price has just been trending in a very fast manner to the downside. But certainly bearish options are still on the table despite this spike to the downside, which kind of shows maybe a reversal is coming. So lots to think about on US equities and US indices. We spent too long on that though. Next to talk about is the dollar, where not much can be said apart from the fact that price is kind of just waiting around, sitting around and consolidating. We are getting some interesting US inflation figures this week, so that of course be affecting the dollar, as well as the US GDP growth rate figure. That will also affect the dollar greatly. So two key figures that you should listen out for that will be pushing the dollar either to the upside or downside. But in terms of levels and where price is to go next, it does seem like price is just stagnating, and after coming into contact with that 50% Fibonacci retracement level. Next to talk about though is Euro USD. Not much can be said on Euro USD either. Price is still consolidating around these lows, around this kind of old level last seen since November. So certainly prices in the negative with regards to recent price action, but ultimately this all this price action is weighing on the current macroeconomic trends, and ultimately at the moment it does seem like the Eurozone, the ECB, will be the first central bank to cut interest rates, and it does look like the Fed will be the last out of those leading central banks to cut interest rates. So that's why Euro USD is in such a bearish position at the moment. Next to talk about is pound yen though. Not much to say on pound yen at the moment. Price was kind of consolidating around the end of last week as a result of economic data coming out, and price, it seems like on Friday it started to kind of push to the downside. We of course have this strong area of liquidity and support down here around 190. So should price make its way back down there, certainly it could find some more bullish momentum, bullish liquidity to continue to move higher. So keep your eyes on pound yen. Next to talk about though is Bitcoin, which is around the $65,000 a Bitcoin level at the moment, and over the weekend kind of pushed a bit back to the upside, but ultimately is just moving in a very slow fashion, consolidating really at the moment, without much kind of trend being clear. So lots to think about for Bitcoin as well. Next to talk about though is gold, with regards kind of contextualizing what we were talking about at the start. which is still at those all-time high levels. And seemingly won't stop pushing higher. That said, within the past few weeks, or past week really, price has stagnated and failed to break above this key liquidity box, this key liquidity zone, where there is a great deal of resistance around the $2,400 an ounce level, I believe. So most certainly price is in a position which is very interesting to look at, as ultimately should price break above that, we've got endless opportunities to the upside, with price obviously also being in a position where it could retrace back and break and hook back to that level before continuing higher. Lastly to talk about though is of course oil, which did decline ending off last week, mid last week, but ultimately as a result of the world tensions, volatility, price spiked to the upside during those Israeli strikes on Iranian territory, and we're still waiting for an Iranian response, but the fact that we haven't seen one yet has caused price to stay around these levels. It does seem like so, possibly oil won't continue to those levels that we were talking about before, but ultimately we'll have to wait and see depending on what does happen over in the Middle East. That's all to talk about on the charts though. Lastly to talk about, of course, is the economic calendar. We're getting some very important data this week, so lots to listen out for. Firstly, we're getting the German manufacturing and business climate figure, followed by the Aussie inflation rate figure, and then followed by the US durable goods orders figure. Followed by that, we're getting the German consumer confidence figure, and then the US GDP growth rate figure. And finally, to end off the week, we'll be getting the Bank of Japan's interest rate decision and US inflation rate figure and US consumer sentiment figure. So 3 very important figures to end off the week, with that Bank of Japan interest rate decision, of course, affecting pound yen greatly. So make sure you listen out for that one, as well as the US inflation rate figure, of course. That's all to talk about on the economic calendar, though. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. That's all from us at Wildwood Capital, though. Have a great trading week. Have a great trading day. But once again, that's all from us. See you later. Bye.